President Biden has recently made capital gains tax front and center. So, what is it? A capital gain occurs when you sell an asset for more than you paid for it. A capital loss is the opposite. You sell an asset for less than you paid for it. And yes, that could actually be an appropriate strategy. For this video, I'll focus on capital gains on investments, stocks, bonds, mutual funds, ETFs, etc. I won't address your home, your business, or any collectibles that you might own here in this video. So just like you pay a percentage of your salary as tax, you also pay when you realize a profit on your investments, but the rates can be different. There's short-term capital gain. When you hold an investment for less than 1 year, you're subject to taxation as ordinary income at graduated tax rates. It's the same way you pay tax on your salary. There's also long-term capital gain. When you hold an investment for longer than 1 year, the 2021 tax rates are lower, between 0 and 20%, depending on your taxable income. The 20% long-term capital gains rate is what President Biden is looking to increase for those who make more than $1 million. Now, here are some ideas to avoid paying capital gains tax. Invest for the long term. If you don't sell, you actually don't realize the gains. Watch your holding period. Again, longer than 1 year, you're typically going to pay less in taxes. Take advantage of tax-deferred retirement plans. Buying or selling within your 401k, your 403b, your IRA is not going to trigger capital gains tax. Use capital losses to offset capital gains. It's actually called tax loss harvesting. You sell the losers and you realize the loss, which will be netted out against any gains. And you can also identify specific shares to sell. Choose the shares with less embedded gain. Seems simple enough. This assumes you bought shares of the same investment at different times. Now, we always tell clients not to let the tax tail wag the investment dog. There could actually be a good reason to sell an investment, even if you're going to incur a large tax bill. But it's important to include tax planning within your investment strategy. You should also speak with a tax professional prior to taking an action that might not be able to be undone. Hope that helps. If you have a financial planning question I can answer, email me, brad.wright@launchfp.com, and I'll help you get to know your money.